What's up, everyone? It's Scotty with MoneyVest. So today we're going to be talking about one of my favorite stocks in the market, and they are going to be reporting earnings tomorrow. So I'm going to break down everything you need to know about this company. We're going to run through the earnings expectations because they are, like I said, reporting earnings tomorrow. We're going to take a look at the revenue, the earnings, all these different expectations, the balance sheet, the cash flows, and of course, calculate our intrinsic value on this business as well. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the members only private videos, and of course be able to engage with a lot of other users on our Discord, and also get trade alerts, trade ideas. Everything is going to be included with the link down below. So we'd love to have you on board. If you have any questions, feel free to reach out. The company that we are talking about today is going to be none other than Lululemon, and they are going to be reporting earnings tomorrow. They're one of the biggest retailers when it comes to consumer brands, when it comes to just clothing and athletic wear. And this right here is their second quarter earnings, which came out back in August of 2023. And they also did increase their guidance with strong numbers coming in, beats on both revenue and EPS as well. So earnings expectations were 254. They came in at 268. Revenue was 2.17 billion. They reported a little bit over 2.2 billion. And for the current quarter, which is the quarter that they are going to be reporting for, they're forecasting earnings per share of 223 to 228 and sales of 2.17 to 2.19 billion dollars, in line with analyst expectations as well. And they are also expecting profits between 12 to 12.17 per share for the entire year, compared to the previous range of 11.74 and 11.94 as well. So if you take a look at where Lululemon right now is trading at, it is trading at just over $456 per share. It has seen an absolutely enormous rally coming in since the first week of October. It's up over 29, almost 30%. Not to mention from March of this year, the stock's up over 63%. Trading at, of course, very aggressive levels. So if you do the math of 456 divided by 1225, we're looking at a price to earnings multiple of 37. That's exactly where it is trading right now based on its current fiscal year 2023 expectations. Now, one of the reasons why, in my opinion, Lululemon is actually one of the best companies out there is because of its fundamentals and the management team, right? So they have taken on very ambitious growth plans with its, quote, power of 3 X2 strategy, where they're looking to double the sales by 2026 to $12.5 billion compared to 2021's revenue of over $6 billion. And to get there, the retailer has been working to expand its brick and mortar footprint and double its men's and direct-to-consumer revenue as well. This right here, while the turnover rates are still a bit slower than historical levels, the company said it's in a good position with both the currency and level of inventories, and direct-to-consumer revenue was up 15%, but it was a smaller part of Lululemon's overall channel mix, and direct-to-consumer sales represented 40% of overall sales compared to 42% in the same period last year. And this right here were the numbers as of the second quarter 2023. Revenues coming in at just over 4.2 billion for the first 6 months. That's up from 3.4 billion, and gross profit also up from 1.9 to over 2.45 billion dollars, and gross margins also expanding from 55% to 58% for the company, and income from operations also jumping from 661 million to over 880 million dollars. Slight margin expansion of about almost 200 basis points, or 2%. And we did have net income also increasing from 479 million to over 632 million dollars for the business as well, with, of course, diluted earnings per share up from 3.74 to almost $5 per share for the business. Now, when it comes to the balance sheet, there are certain things that I do want to point out. So take a look at cash, $1.1 billion. However, inventory levels have increased. If you take a look at on a quarter-over-quarter basis, they've gone from 1.4 billion to 1.66 billion, and they're also up from same time last year. So again, I'm going to be interested to see what those inventory levels look like tomorrow, because for any retail consumer brand, for any product-based company, inventory management is incredibly important, because if inventory levels are high, that means they're not moving product. And if they're not moving product, that means that's going to hurt their revenues, and they're going to have a higher shelf life and some higher cost associated with holding on to that much inventory. So 1.6 billion, which is an increase on a quarter-over-quarter basis, but they need to drain that inventory so they can kind of increase better flow and the process of actually continuing with their growth. Total current assets, $3.3 billion. Total current liabilities are $1.3 billion. So we got a very solid current ratio. If you take inventory out of the equation, then maybe it's comparable because 1.6 billion versus 1.3 billion over here. It's still a little bit over one, the quick ratio. But again, inventory does make a pretty sizable chunk of the overall current assets, almost 50%, right? We got property, plant, equipment at 1.3 billion. We've got total assets at just under $6 billion here for the company, with total liabilities that are going to be sitting at, so we take 6 billion minus 3.5. We're looking at 2.5, roughly around $2.5 billion in actual total liabilities. And of course, non-current liabilities are going to be closer to about $1 billion. Current lease liabilities and other non-current liabilities are just a little bit under $25 million. So they do have a pretty decent balance sheet, to say the least. And this right here obviously has been the overall growth for the company, and you'll notice a very nice consistent increase from about $1.6 billion in revenue, and of course gross profit sitting at just about $857 million, and that's seen an increase to over $8.8 billion in revenue with just over $5 billion in gross profit. Very, very significant growth, with operating income going from $400 million to well almost $2 billion for the company. This right here is going to be the share count, which has been pretty flat and slightly even down. So the company has bought back shares. That's exactly what we want to see. And margins and profitability also incredibly good. We're looking at well over 56 to 60, 70%. 56 to 60% gross margins, 25, 26% EBITDA margins, cash flow margins is just over 9%, and a return on capital, equity, and assets also incredibly strong for the business as well. Valuation is a little bit of a concern, I would say. So we do have, valuations for Lululemon sitting at just over 40 on a price to earnings basis. Price to cash flow is a little bit over 31, 35. Price to sale is just a little bit over 6. So, I mean, you could argue that the valuation is a little bit more on the overextended side. And this right here is going to be the earnings expectations for Lululemon, where we are expected to increase EPS by about 15% over the next 9 to 10 years, a little bit under 16% actually, and revenue also expected to grow from just a little bit under $10 billion to well over $22, $23 billion for the company as well. So very, very nice consistent growth expected for Lululemon. And this right here is going to be tomorrow's earnings expectations, with EPS expected at 228, kind of in line with what their own guidance was, and revenue just a little bit over $2 billion, with 4 analyst upgrades and 3 downgrades going into this earnings over the last 90 days. So if we come over to our discounted earnings multiple model, and if I plug in, let's say, $1 billion in net income for the company, grow them by 16%, give them a 25 P multiple, 12% discount rate, 10% margin of safety, and a share dilution of -2%. Unfortunately, the actual valuation sits at $236, right? It still sits here, and this right here is going to be that sensitivity grid. And folks, this is simply math, right? This is simply numbers, right? So if you disagree with it, right, I totally understand if you expect Lululemon to grow at a much faster rate. Let's say that you expect them to grow at a 24% rate and 35 times P multiple, then it would be at $461, close to where the current price is. But do we really believe that Lululemon can actually grow profit, earnings, bottom line net income by 24% over the next 5 years and demand a 35 times P multiple? That's the real question. If you believe it can, then it's already trading at an intrinsic value, right? Might even be undervalued. But if you believe that, no, I think 16%, 14% is a lot more reasonable with a little bit of multiple compression over time, then I think in the low 200s would be a much better pricing for Lululemon from a discounted earnings multiple model. And again, this is the sensitivity grid that you can take a look at yourself. Now, in terms of technical analysis, we are slowly approaching to an all-time high. So I have no doubt that Lululemon can actually trade as much as $481, $482, considering what they actually end up announcing on the earnings tomorrow. It's possible that it kind of breaks above 481 and actually trades at an all-time high. It's possible this right here is going to be that resistance. And on an RSI MACD basis, we are certainly getting a little bit more on the overbought side. So it's got to be careful from a technical analysis perspective as well, because the risk reward obviously is not that favorable on the long side. But the company is very well positioned to capitalize on the growing trend of athletic wear. Fundamentals are phenomenal. But again, valuation is a little bit of a concern for this business at the moment, which of course with a stock as strong as Lululemon, with most companies that are doing really well, valuation is almost always a concern because they are trading at pretty expensive levels because a lot of investors want a piece of that business. So resistance is going to be a 481. This right here is the green rectangle and the support where I would be very interested. In Lululemon, I would be paying a lot more attention here. So inside this green rectangle, and in the meantime, there's going to be a strong support and a demand roughly between 385 and 410. But of course, in case we get down to sub 300, closer to the low 200s, is when I would be a lot more interested in Lululemon. Of course, there's going to be another support right over here at $205 for us to watch. So hope you all enjoyed this video. Let me know your thoughts down in the comment section below. And what do you think about this business? As always, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining us. It's always happy investing. I'll see you all in the next video.